always assets fall, always interest rates typically go down and bond prices up. Not this time. Interest rates went up, bond prices down. Countries are selling bonds. They don't want them. They don't trust us monetarily, fiscally, or sanctions, or any of the things that once was the luring attraction to the United States seems to be the detriment. So instead of accumulating bonds, they're selling them, which, gold has 10x'd it over the last 2 years, doubled it over the last 25. Why hold it? No counterparty risk. That's why France brought all their gold back just a few weeks ago. They're sick and tired of the lack of trust. And I think that has a big problem. That is a big problem with the bond market. Maybe that's why you got Paulson saying that out loud, which was shocking. But I would be shocked if the U.S. wasn't really accumulating gold. And I don't agree that it's our largest export. It shows up on the numbers the same way. That's part of what we did in Venezuela. And that gold is being refined in Switzerland, in my opinion. And then we'll come back. Whether it be in an IRA or one of our gold programs or any vault. We have accounts at most of the major vaults. It's very easy to do and very clean and efficient. And you're just trading one and taking the other. You could even trade your silver, get rid of it altogether, close the storage account, and have the gold sent to you, because a tube of 20 gold eagles is $125,000 now. It's getting to be, even though it's very expensive, it's easy to hide. If you wanted it in the vault, we can still keep it there. We have wonderful programs with BRICS, second to none. No one beats our rate. And we've had that program with BRICS for over 15 years now, of course. Now, there's an article out there on Bloomberg, which I vehemently disagree with. I agree with the facts of it, but not the reality of it. They says that the largest export of the U.S. government the last few months has been gold. Which is true. But there's a company called Trafigura, I believe, something along those lines. And I have a client who works there who confirmed that they have been receiving huge amounts of doré from Venezuela that they turn around and are exporting to Switzerland for refining. Now, this would show up on the export numbers the same way as if we were exporting it, to pay for bills, because the theory is, well, China doesn't want to take our dollars anymore. They're demanding gold, and look at all the gold we're exporting. I would argue we're exporting gold right now to get it refined, because the refineries in the United States are all backed up 16 weeks because of the margin increases. So the U.S. government and the biggest money on the planet is very interested in gold right now, and I think everyone else should be, not to become wealthy, but because there's a lot of crazy things happening right now, and monetarily in particular, a bond market in particular, where a lot of people are calling for, if we don't do yield curve control, the bond market's just going to blow up as rates go higher. We've seen that during the war. Every war that I've seen in the Gulf since the original one 20 plus years ago, interest rates fall immediately. Bond prices go higher as everyone rushes to buy bonds and dollars. Not this time. They bought dollars. They have to. Assets fall, of course, because there's a rush to liquidity. People sell assets to buy dollars so you can buy oil. Oil goes up, always. Assets fall, always. Interest rates typically go down and bond prices up. Not this time. Interest rates went up, bond prices down. Countries are selling bonds. They don't want them. They don't trust us monetarily, fiscally, or sanctions, or any of the things that once was the luring attraction to the United States seems to be the detriment. So instead of accumulating bonds, they're selling them, which, gold has 10x'd it over the last 2 years, doubled it over the last 25. Why hold it? No counterparty risk. That's why France brought all their gold back just a few weeks ago. They're sick and tired of the lack of trust. And I think that has a big problem. That is a big problem with the bond market. Maybe that's why you got Paulson saying that out loud, which was shocking. But I would be shocked if the U.S. wasn't really accumulating gold. And I don't agree that it's our largest export. It shows up on the numbers the same way. That's part of what we did in Venezuela. And that gold is being refined in Switzerland, in my opinion. And then we'll come back.
Historically, geopolitical crises drove investors into government bonds, pushing interest rates lower and helping calm financial markets. This time, however, the pattern appears to be shifting. During recent Middle East tensions, Capital flowed into the US dollar for safety and liquidity, yet Treasury yields moved higher instead of lower. That unusual move has sparked concerns that global confidence in sovereign debt may be starting to weaken. With inflation pressures, rising deficits, and growing sanctions risks, many countries are reconsidering their reliance on US bonds. Analysts also caution that rising debt servicing costs could eventually force central banks to intervene through policies like yield curve control, artificially suppressing borrowing costs, while potentially accelerating long-term currency debasement.
January was the biggest month we've ever had. Huge, huge. Right now it's very quiet. People got so freaked out by the by the smackdown. There has been more selling than I would typically see, which again, I guess is a contrarian indicator. There's still a decent amount of volume, but not where it should be when you look at what's happening on the exchanges and what's being delivered and the tension we see up there, which is at a different level. The public is always the last one to figure it out. Everything is, look, Silver Eagles are cheaper now than they've been since 2020, since the pandemic. Pre-65 silver at $1.50 below spot, never seen that ever. Things are very cheap right now, and it's because there isn't as much demand as one would expect in this environment. But that is very, I guess you can say that counterintuition typically is that contrarian view is typically very bullish, or it's a bullish indicator. That's what the big money does, and they throw everyone off the scent. They smack the price down so viciously with the rising margins and the rebalancing that everyone looks the other way and licks their wounds, as they then are able to stockpile on the cheap ahead of the curve. I would say that by fall, you see things vastly different. I do believe that. No real data point to support it other than 35 years of doing this and just kind of being able to feel the way things are going. It is starting to pick up a little bit right now, but it's been slow the last month or so after the price got killed and people got scared, certainly. But as the BIS said, this was structural, it wasn't fundamental. It was synthetic. It was done for a reason, to flush out the speculators. At the same time, the biggest money in the world stood for delivery at levels no one has ever seen. So that should be all really that you need to know. And I think that it portrays for much, much more robust times ahead.
Behind headlines centered on diplomacy and military conflict lies a broader competition over strategic supply chains and critical resources. Nations are increasingly focused on securing control over shipping lanes, mineral reserves, energy corridors, and refining infrastructure. From tensions around the Strait of Hormuz to growing interest in Arctic trade routes and Greenland's resource potential, governments appear to be positioning for long-term resource security. At the same time, countries such as China continue stockpiling key commodities while restricting domestic outflows of precious metals. Damage to refining and energy infrastructure in conflict regions has added further urgency. Many analysts believe this period is less about isolated geopolitical events and more about preparation for a new global economic order, increasingly shaped by access to resources and supply chain resilience.